Silicon Valley Bank collapse. 1. Silicon Valley Bank, SVB, made Forbes magazine's annual ranking of the best banks in America for 5 years in a row. 2. SVB also made Forbes's inaugural Financial All-Stars list. 3. The celebration was short-lived as regulators took control of the bank due to its inability to meet withdrawal demands from depositors. 4. The collapse of SVB was the largest bank failure since the 2008 Washington Mutual incident and the second largest in U.S. history. 5. SVB's failure to meet withdrawal demands caused a run on the bank, leading to the California Department of Financial Protection and Innovation, DFPI, taking over the bank's operations. 6. SVB was the nation's 16th largest lender before the shutdown and a major financier of tech startups. 7. The Fed's aggressive interest rate hikes over the past year had a noticeable impact on the startup industry, in which SVB played a significant role. 8. The bank's downfall seems to be attributed to management failures rather than indicating broader issues in the financial services sector. 9. The bank had wrapped up most of its deposits in long-term treasury bonds, which put pressure on the bank. 10. The shortage of cash was the reason behind SVB's collapse. 11. Currently, approximately $175 billion of deposits are at stake. 12. The Federal Deposit Insurance Corporation, FDIC, has been appointed as the receiver for SVB and has created a Deposit Insurance National Bank of Santa Clara, DINB, to protect both insured and uninsured depositors of SVB. 13. The bank will reopen on Monday and deposits will be released to the companies accordingly. 14. The issue with SVB is still being evaluated by experts, but certain cracks were found in the bank's liability. 15. SVB had higher reliance on institutional, VC funding rather than traditional retail deposits. 16. The U.S. Fed's policy rate played a key role in the downfall of SVB. 17. SVB's $209 billion in assets are roughly two-thirds of Washington Mutual, which failed in 2008. 18. The midday closure of the bank was unusual and is still being evaluated by experts. 19. Capital, wholesale funding, and loan-to-deposit ratios improved for many U.S. banks since 2008, but there are exceptions. 20. SIVB carved out a distinct and riskier niche than other banks, setting itself up for large potential capital shortfalls in case of rising interest rates, deposit outflows, and forced asset sales. 21. SVB had unusually high reliance on corporate VC funding. Only the small red private bank slice looks like traditional retail deposits to us. 22. Of the total deposits at SVB by the end of December 2022, about $152 billion are reportedly uninsured, which is over the $250,000 FDIC insurance threshold. 23. Only $4.8 billion of deposits are insured. 24. Companies, especially startups, are uncertain whether uninsured depositors will recover their full amount from SVB. 25. The collapse of SVB has had a profound impact on the tech industry, affecting hundreds of companies, including retailer Camp and coffee company Compass Coffee. Thank you.